Hello YouTube, and thank you so much for coming to check my channel. If you like this content, you will do me a huge favor. If you can give a like or subscribe and share it with your friends. I'm just trying to do my analysis as a few people ask me about the stock market, especially the S&P 500, the 500 companies in the American index that is getting traded by the New York Stock Exchange. So I'm not here to tell you that the market is going up and down due to the news. I'm just trying to read the charts the way they present to me, so you can have an idea and you can take the decision on your own, either if you wanna buy or go long or sell or go short. I'm not your financial advisor. No one pays me for that, so I'm just expressing my opinion. So as you can see here, we are in the daily chart. Let's start with the monthly. And why with the monthly? Because last Friday on January 29th, it was the last day trading for January. As Monday, we will print another candle here formation. So mostly I like to do this kind of analysis starting from the highest time frame monthly, just because Friday it was um, something that it's not happening every day. It was the closing monthly on a Friday, which also includes with the weekly and also with the daily, of course. So let's try to interpret the monthly candle. January 2021, the way I see the candle here, this is candle formation called the doji indecision. Why? Because you have the price going all the way up to 38.70, as you can see it right here when I stay with the mouse on the candle, the highest point, and the closing point was 37.14 at this level. The lowest point was at 36.62. So between this range, the selling power was higher than the buyer power. So that explains a little bit that this peak that we have at this moment, it's somehow the top, at least for it was for January. As you can see in December, you don't have this wick, this red skinny line going on top of the candle. You have pretty much trading in a range, both of the buyers and the seller agreeing with the price, while in January you have more sellers coming in the market and pushing it down. It's good to have an analogy to see how the other candles on the previous years on January they closed. So how to do that? You keep the mouse on the January, as you can see on the bottom here, and then you scroll to the other side to find the January month. What was in that month? Well, it doesn't look the same formation of the candle. This is called mostly as a shooting star, which indicates a trend reversal. So why I don't trade the news? Because I don't care what's happening in the stock market on the news on CNBC or Fox or CNN. I trade the chart because the chart it tells me what will happen. So when I have a candle like this that it happened in January, I warn people to be careful on their investments. None of them took my advice, and as you can see, what happened? Well, I protected myself, but I'm not here to lecture anyone. I'm trying here to teach you guys how to interpret the charts and make a decision not based on emotion or on the news that are printed on TV, no matter how good or bad they are. Because the big institutions, what they do, they look at the charts the way I look at the chart, and then they create the news that it's making the market going higher or lower. I am 100% what happened here in this formation, it coincides with the crash that we had. If it wasn't any coronavirus, this candle formation which is similar to this one, the market will still would go down percentage wise. So the correction on the market was inevitable. So in this case, the market closed at this level, which was in July 2019, and it dropped all the way down 5.15%. Okay, so the way you interpret the chart is just to find the formation, the way the candle looks. So going back to our present time, January didn't close all the way like this, but it closed in a top of the trend, not like this one. You might ask why this one and this one, they look similar. Yes, they do, but this one is forming at the correction time. As you can see, the top of the week, it's not higher than the previous month. So you can interpret this candle as a reversal because it didn't shoot higher than the previous month. So you take one by one. You don't jump into a market and go blindly and bet your money, your savings, on a candle just without looking at what happened before. So at this moment, basically, we have a big selling pressure coming into the market, pushing all the way down to this level. After that, the price of the market is recovering, going a little higher. And if you want to see how high this candle went, it's around 60 to between 50 to 60% from the previous candle. So how you do that? You measure, you put your measuring tool from here, yeah. So you have it like that, you go down and you find the ruler, you click once, you go and you kind of lining up with the bottom that it was on the previous month, and you see what was the whole candle. It gives you 3.22%, and then you see how much it went down, about 1.87. So that's giving you approximately 40%. It was traded lower this month from the previous month. You have 2% here and 1.24% on the top. I hope you can understand what I'm trying to say. So January 2021, we have a rejection from the top with some buyer pressure from the bottom. Compared with this one, when was the buyer pressure was almost nothing and the seller pressure was strong. Okay, now this is on the monthly chart. To get more perspective, you have to go to look on the weekly chart. So each candle represents a month. Wow, what is this candle here? This is called textbook on the trading chart. It's called bearish engulfing. That means the candle being red, it's bigger, it's engulfing the one that it was before. So that indicates the selling pressure that it was on the market. Where it stopped at the level higher or lower, or it was the candle was bigger than the previous week, and showing that the selling pressure that it's on the market. Okay, so by textbook, also being a bearish engulfing candle, it indicates a possible drop on the market. Okay, it's not gonna happen in a day or two. You have to wait for a week. I think, in my opinion, based on this candle and knowing what happened before, that we will have probably, not 100% for sure, a retrace of the next candle somewhere to this level of 37.66, because that's kind of lining up with the bottom of where we kind of find a support, a resistance, sorry, this is a resistance. Okay, so this is on weekly. We're still on the higher trend. What indicates me on the higher trend? It's the first indicator that I have here drawn with a yellow. This is the 21 exponential moving average, 21 EMA. As long as we are above the 21 EMA, trend is higher. We can go lower. That doesn't mean that the market is gonna crash. We need to find support. This is the first level of support, the major support on the weekly. So again, market, it looks like it's gonna dump, but don't be surprised if it goes like probably 30% higher than it was from the previous candle. Okay, now let's move on the daily. The daily is showing us clear, as I said on the weekly, selling pressure from the top. Okay, well, we passed the 21 EMA on the daily, and at the moment when on the Friday when was the closing time, we find support on the 50. This is another level of support for a trend. As long as these lines they're going up, the trend is up. If the lines they go down, that it's a downtrend, and it's not a crash, it's a correction. What has to go up has to come down. Nothing goes up forever. As you can see, here the market went down. It went below the 21, it went below the 50, it went below the 100, and it didn't even reach the 200, which is being considered on the trading analysis the last line of defense for a trend to be in a upper direction. So on the daily, we still have a big pressure on the selling side that it's engulfing what it was before. And the buying pressure that it was on the other day, on the Thursday, it's still less than it was on the Wednesday. Okay? So having this formation, it creates kind of like a sandwich, if you can see. And mostly when you have a selling candle with a buying candle and a selling candle, that indicates the price can go even lower from this level. Well, I personally think that we have a good line of support. I'll try to draw some lines. I would say probably here, there will be the first one. Then we have here. That's the price hitting several. Here it was resistance. Here it was resistance. Here it was resistance. And it's going up. Here the price is hitting a resistance. This is a support. Then it crashed it down. Then it breaks the support. It goes up and it's going down. It is crushing, it's crushing the resistance and is going down and creating a support. So this will be two targets. Now let's see if I stay with these lines and I move the time on the weekly, where these lines they will line up with any of the yellow or other curvy lines. So here we have no line, but it's possible the market to go all the way down between this range to touch the 21 moving average. If the body of the candle will close at the top of the 21, that means we have a strong support. So no need to be nervous. You have to trade with no emotions. It's okay if the market goes down. That means you can buy some assets or this fund as a cheaper price, as a discount. So as long as we still keep on this trend, and as you can see, the lines indicates an upper direction, there is no market crash. Anything that you see, even with the coronavirus, it was a huge opportunity for people to invest, to buy something at a really low price. So when the trend is changing and the lines they turning towards down, Let's see if we find somewhere something like that. Yes, of course, we find here around the 2008 when the lines, the slope of the lines, they're getting in a cross. That means the market is going down. As you can see, if the market is trading above the first line of defense or slightly lower, you're in the uptrend. When the market is trading, the candles they're closing below the first line, the 21, that means the price is correcting and you are in a downtrend. In a downtrend until the buyers they step in and they push the price higher, and the candles, as you can see here, it's closing above the 21 EMA, and after that it's trading higher. Okay, so remember, we are in the weekly time frame. This is a lot of data. It's not 2-3 days, it's not 5 minutes on the chart. They're years and months. If you go on the daily and you see the trend being still higher, that means you are in the uptrend. What happened here in September, right before when was the election and everything, with a big new wave of the coronavirus, what it was on the news, whatever it was at that time, I don't know, I don't watch news. You can see clearly the price breaking the 21 and trading lower. All this price action is trading below the 21 EMA. The price is correcting. Imagine you sell here and then you wait and you buy here, so you don't have, you save a lot of capital. You don't go through a disaster here and probably you're pointed here to be like, I'm out from the market, and then you miss all this uptrend. That's the one problem that most of the investors slash traders, they're doing it. When they see the price going down, they don't sell at the right time. They wait, and basically they're out from the market when it's actually time to buy. So money, it's just energy. It's getting transferred from one person to another one. That's how you have to think about it. So generalize what I talked today about the S&P 500. On the monthly, we close bearish. We can see a downturn, but we're still in an uptrend. On the weekly, as you can see, the candle was bearish. We might have an opportunity to invest at the discounted prices if the price, the candle, or the week, it touches the 21. Okay? On the daily, we're already going below the 21, at the moment finding support at the 50. Okay? So if the price would go down, as I said, on the resistance, the support levels that we have, it wouldn't be a bad idea if the market goes down in this region here, and if you know, you can buy something here if you want. Alright, thank you so much, and I appreciate if you leave any comments, give it a like or unlike, and if you have any opinion and you want me to talk about anything else on the charts, let me know. Thank you so much, YouTube, and you guys are great. Bye bye.